Hey everyone, it's Anthony Venuto here with InTouch Mortgage Solutions. It's Friday, Finance Fridays. Thanks again for tuning in to another episode. On this episode, I want to talk about ways that we can help you save some money on interest, pay down your mortgage a little bit faster, some tips and tricks, very simple stuff. Why don't you come in inside and we'll talk a little bit more. Here at InTouch Mortgage Solutions, our goals are to assist our clients to achieve the best product, get the best advice, and obviously the best rate that we can get our clients on their mortgage. Working with our clients hand in hand, we try to plan out a good strategy for them to A, get the mortgage that they're looking for, and also how to aggressively attack that mortgage, pay down the principal faster, and avoid as much interest as possible. Now, there are many different strategies that you can utilize to help pay down your mortgage faster, whether that be increasing your payment structure, which is your payments that you make per month, as well as lump sum payments. But they're dependent on the fact that if your lender will allow you to do those. So first and foremost, the fastest and easiest way for many Canadians to pay down their mortgage faster is to go from a monthly payment into an accelerated biweekly or accelerated weekly structure. Now, of course, each one of these scenarios will depend on how you get paid, your income structure, as well as your ability to meet those obligations. The other option that you can look at is taking advantage of lump sum payments, right? So many of the institutions will allow you to actually prepay your mortgage every year on a certain aggregate amount, whether that be 5, 10, or 15, 20% of the mortgage balance. So, for example, if you had a $500,000 mortgage and your lender said, hey, you're allowed to put 20% per year on the first year of the mortgage, usually around the anniversary date, or depending on the lender, at any given time throughout the duration of the year, you'll be eligible to put up to $100,000 towards that mortgage if your lender allows you to prepay 20%. Now, what I want to discuss in this video is more or less just how changing your payment frequency from monthly to an accelerated biweekly can help save you some time, can help you save some time off your mortgage, and maybe put some money in your pocket and avoid some of those interest charges. Looking at option one of the amortization summary, you will notice that the mortgage is $640,000. The interest rate is 1.99%, and the amortization is 25 years. The amortization is the entire duration to pay off the mortgage completely. You can choose between 25 and 30 years in some scenarios. In this particular case, the client has opted for the 25-year, and they've received the rate of 1.99% on a monthly payment frequency, compounded semi-annually. Now, compounded semi-annually means that the lender charges interest twice a year. Some lenders will actually calculate interest on a monthly basis as opposed to semi-annually. So pay attention for that when you're applying for your next mortgage. Further down, you'll notice in the mortgage summary that the monthly payment in this particular scenario is $2,707. Total payments over the course of 5 years will total to $162,420. If we take that payment and we reduce the interest from it, or deduct the interest from it, is what you'll be paying over the next 5 years, is $58,436.60, leaving us with a total principal amount that will be contributed to the full mortgage of $103,983.40. Basically, from the $640,000 after the 5 years is up, you'll be left with a balance at maturity, which is after the 5 years, of $536,016.60. Now, if you notice in this particular scenario that there is more money going towards principal than towards interest. But now let's take a look at the option for accelerating your monthly payment from monthly to accelerated biweekly. If you notice, the mortgage information has not changed, everything is identical. We've basically taken the mortgage from its inception and said, hey, we are going to now make the payments accelerated biweekly as opposed to monthly. So the new payment will be $1,353.50. The total payments now over the next 5 years will increase to $175,955. Total interest over that span will be $57,673.43. That's a savings of $763.17. The total principal contributed to the mortgage now will be $118,281.57 as opposed to the $103,983.40 from the monthly. Now, when you look at the both actual maturity balances due after 5 years, you will notice that if you accelerate your payments, you will go down to $521,718.43 as opposed to the $536,016.60 for a total contribution of additional money towards principal of $14,298.70. Now, what this illustrates is simply that by increasing the position of your mortgage, you can actually put more money towards principal and save some money on interest. As you can see from the very simple illustration of changing your payment structure from monthly to biweekly accelerated can help you reduce a little bit of interest and help put more money towards principal, helping you actually pay down your mortgage a lot faster. Now, each case is different. If you have a different interest rate, the way interest and principal is calculated will differ from mortgage to mortgage and lender to lender depending on the rate. But to break it down, if you're making your payments every month, that's only 12 payments per year. If you were to change that to accelerated biweekly, you'd be making 26 payments per year. Now, wait a minute. If you're doing it every 2 weeks, how is it 26 and not 24? Well, 24 would be considered semi-monthly. That's twice a month, no matter how many days are in the month. By exchanging it to accelerated biweekly, you're actually making 2 additional payments, which actually over the span of 5 years can help reduce your mortgage significantly and actually increases to the payments being applied to interest. So depending on your specific lender, that will equate to some significant savings and help you bring down that payment even more. And as I mentioned earlier on in the video, taking advantage of simple things like a prepayment privilege. So if you have the ability to increase your payments by X amount, will help you actually pay down that mortgage faster. And just to keep in mind that if you do increase your payments, anything that you put above and beyond the mortgage payment that you're required to pay actually goes straight towards principal. Remember, keep in mind you're only eligible to put a certain amount depending on your lender. Also, you can do a lump sum payment or an annual dump, some people refer to, that they're able to put up to the 20% down. But as I mentioned earlier, always be careful that you don't exceed that amount because you will trigger a penalty. So the best thing to do is always wait till your annual statement comes in or talk to your mortgage professional or pick up the phone and call your lender, find out what you're eligible to put down. As you see, and as we've demonstrated, there's many different options, different ways for you to pay down your mortgage. Obviously, it all depends on your particular situation. It depends on your financial ability to do that. Always remember, if you apply money to your mortgage in lump sums or whatever the case may be, if you're increasing those payments, when you put the money into your mortgage, you always have to ask for the bank's permission to pull it out. So speaking to your mortgage professional before putting money into your mortgage and understanding your actual stages and where you plan to be in the next few years can help you avoid refinancing, costly refinancing to get out of those mortgages and pay penalties and put you on the right track. Once again, if you have any questions, always feel free to reach out to us at InTouch Mortgage Solutions. We're always here to help. It's Friday. We wish you a great Friday, a great weekend ahead, and thank you for tuning in.